All right. Let me get over here, make sure the stream's kicking. It's kicking. All right, guys. Who's ready to figure out what's happening with the FOMC? I know I'm excited. Let's get over here real quick. You know what? I don't even know if we'll need this. We probably won't need this. We'll probably just do this off the back of CNBC. Let me just refresh here real quick. And then again, so we'll get the Fed rate decision. That will happen at 1 o'clock in about 10 minutes. I'm sure we could figure out stuff to talk about in the meantime. And then, yep, okay, cool. Let me just make sure we're muted. Okay, sweet. Let me just got to adjust something down here. But what we're really looking for is probably Papa Powell talking at 1:30. So we're still about 40 minutes before that's going to happen for anybody who's coming in early. And I think I got this working. Yeah, there we go. There's the chat. What's up, Alex? What's up, Oak? So let me refresh some things here real quick. We'll hang out real quick. Inventories. There's nothing ever interesting in inventories. I don't really care about the housing market right now either. Devin popped in to meet Kevin, and he's typing louder than he's speaking. Really? He needs to work. I remember when Meet Kevin used to just have all of his stuff together, and now he's just kind of a mess, it feels like. Elusive 270, thank you for what you do, Jesse. You're welcome, my friend. Oak, Alex, my dog. So we got a few minutes. We got a few minutes on this, guys. Also, later today, balance of trade, full year GDP growth quarter over quarter, year over year for Argentina. I don't think tax revenue's on the schedule yet. That's why it's down here without a time slot. So that'll be cool. That'll be cool to see how that goes. Also, we have in the U.S. at 3 p.m. today, so we'll have to talk about this tomorrow. Remind me if I forget. We will have net long-term tick flows, which are interesting, but more importantly than that, I should say along with that, foreign bond investment and overall net capital flows. That's the one probably I'm most interested in. Martin, thank you for joining and becoming a member, my friend. If you're a member, you can talk and chat, guys. I think it's as low as $2 a month or something like that. It's a way to filter out the trash. Otherwise, you just get a bunch of assholes in here. What's your opinion? Will he be dovish? I think he will. I think he will because I think he has to be. I think he'll be seen as a political hack if he's screaming with. So let's just back up the truck here and talk about this, okay? So just today, let me adjust this a little bit here. So just today, we got some input about tariffs again, but it wasn't negative. Isn't that fascinating? So let's just look at this real quick here. Let me go back down. It's in here somewhere. I think it's in here. You know what? Maybe I have it under U.S. economy. No, here's one. Okay, so two different posts from today. White House economic advisor Kevin Hassett. He's the one that talks on CNBC all the time in the mornings. Spent last night with Commerce Secretary and Treasury Secretary Bessent negotiating with other countries about mutually lowering tariffs before April 2nd. So like I said, before it happens, we are going to probably see peak fear. And the day of will probably be pretty good. But this is good, right? This is good. This lets us know that some of the tariff concerns aren't that big of a deal. So Papa Powell's seeing this right now, too. And if he goes in as a strong hawk today, he's going to look like a dick. So I don't think he's going to be a strong hawk today. I think maybe we hear an end to QT, and then we hear some indecision on rates. That's my base case. We'll see what happens. But Walter Bloomberg, Trump admin, new tariffs said to be worth trillions of dollars. So on the FOMC day, they have preloaded this to say tariffs are actually, we're going to reduce tariff boundaries around the world. And at the same time, we're going to increase revenues in the United States. Both of these things are positive for our economy either way. But I think it gives Papa Powell maybe, room to not cut. I don't think anybody thinks a cut's happening. If we look over here at the CME Fed Watch tool to see what the latest and greatest is on the odds, let's just check it out here. It ain't very good for March. It's 1%. So there's a 1 in 50 chance that he cuts rates per this. And he is basically what this says. Now, May doesn't look a lot better. If anything, it's getting worse. It's only like not even 18% chance of a cut. I, like Tom Lee, believe that that's actually going to be a greater indicator or a greater chance of cutting. Why? A few things. Truflation is one of them, right? We already know, guys, because we followed this for a long time. These guys love me. I post stuff with them all the time, and they'll retweet it because I get more views than they do. But we knew that we had went into double-digit inflation, even though the U.S. government never said it happened, right? Like they stopped at 9% or some of that shit. They refused to say that we got up to 11.28. Truflation told us in advance that that had happened. So they were higher than what the Fed said. And then they let us know that rates were going to be dropping substantially, or that I should say the rate of inflation was going to drop substantially, which would give the Fed room to cut. And that's exactly what happened too. So they were early on that. They were early on the top. They called it higher than the Fed admitted to, and they let us know that we were down at the bottom. And they did that when the Fed didn't want to admit to it. And now it's saying, hey, inflation went from like in January, like 2.83% around these times at the beginning of the year, to in February dropping down into the low twos, to in March dropping down into the ones. And this is the reality of it. And this is what, so we've got tariffs aren't going to be that big of a deal, and we'll remove barriers. But then at the same time, we're going to make a bunch of revenues from them. And any smart economist that's worth their weight, and don't get me wrong, there's probably many 6-figure, 7-figure, shouldn't be, maybe under the table, getting money, Fed economists that are getting paid that don't know what the fuck they're talking about. But anybody worth their weight will tell you that this stuff is temporarily, barely inflationary because of currency exchange rates and how things rebalance. And then at the same time, with us removing barriers, that's going to be good for the economy. But then at the same time, we're going to be collecting revenues. And what will actually happen, if anything, it will slow down some of the purchases from that country while increasing our revenues. And that these things are going to more likely to be deflationary than they are inflationary. Because if there's a slowdown in these other places, they have to reduce the price of their goods if we're not putting as much buying pressure on them. It's called supply demand dynamics. I'm just a high school dropout, but I can figure out that fucking concept. So when you have it to where we're not purchasing as many of the goods because people are like, maybe I won't buy that if it's 25% more, 30% more. I don't want to eat that cost. So you're going to have a reduction on the countries that are being tariffed. And if they don't work with us before to remove the barriers, which is great for everybody in the world, if they don't do that, then they're going to get punished and they're going to get hurt, and it's going to lower prices. It's not going to increase them. That's why we were at a 1.6 under Trump's last presidency. So I don't know why I have to keep saying shit like this over and over again, but some people are just retarded. Namely the Fed. And like I said, the new Fed is called Scott Bessent. He's the Treasury Secretary. You might not even know who the last Treasury Secretary is. That's okay. She was a dumb bitch. Her name was Janet Yellen. Nobody really remembers her. But she loaded us with the debt bomb because by doing things that she shouldn't have, right? We knew that rates were at lowest of lows. That's where you roll out really long-term debt when you're in like the 0.25% interest rate. That's when you create a bunch of debt for the country. You don't do it when it's going back up and then do really shorter dated treasuries so that you don't blow out the long end of the curve. That's just cheating. That's how we got the non-QE QE that Michael Howell loves to talk about all the time, because that dumb bitch was running shorter dated treasuries and taking out tons of debt over a shorter time frame. That way she wouldn't, and she was starving the long end of the curve, which all that means is the 10, 20s, and 30s were getting starved, and they weren't issuing anymore so that they could make sure that they didn't blow out the yields too high, right? And you don't want to lock in long-term debt. So they cheated the whole fucking time. But now a new guy's in the house, and his name's Scott Bessent, and he's going to clean this shit up. And he got done talking about that today with Chamath and David Friedberg in the White House. Sounds like a great video, except David Friedberg and Chamath evidently were wandering into the private quarters of the president, and Secret Service had to escort them out. Outside of that, some brilliant stuff in that interview, and we're going to be talking about it. We got about later, I'm going to be making a video probably, or I'll do a series of posts that will clip the different segments that I think you really need to know about, so that we can save you a little bit of time, because I owe it to you guys. I got to get better with the AI and stuff too, to automatically hopefully do some of this stuff for me in the future. I got to automate my life. I don't like working. Anyway, that's why I'm retired. But 12:50, 8:30, so we got about a minute and a half. We'll get that data point. I think it's going to be a fun one. Let me try and get caught up in chat while we're here. Let's see. BTC can't break 200 SMA. Oh, can it? It can't break it. It can't break it? You think it can't break it? I think it can fucking totally break it. I think what it's waiting for is this guy today. His name's Jerome Powell. He's kind of a dipshit sometimes. Other times he's not. I actually like Jerome Powell, but I've never seen, this is beautiful, what I'm looking at down in this bottom right corner, guys. I guess I forgot what screen I was on. This is beautiful. So that 200 SMA he's talking about is this orange one right here. And we're pressing up against this bitch hard. If somebody doesn't act like a cunt today and actually, again, ends QT and does what he's supposed to do, then I could see us bump into 90 real fast. Now, if he doesn't, if he's Mr. Hawk, then everybody's going to shit all over Jerome Powell for the next week, 2 weeks. And it's going to be looked at as, and here's the thing, Scott Bessent with Chamath and David Friedberg said he wants the Fed to be able to remain independent, but they can't be fucking stupid. Okay, I'm paraphrasing. He didn't say fucking stupid. That's just my thing. But he literally said that, and he said, I can't criticize the Fed for what they're doing right now, but I can criticize all their mistakes in the past, and there are plentiful. That's also paraphrasing, but essentially what he said. So again, the Fed's going to receive a lot of pressure if they don't do what they should do. Okay, and it's pretty clear what they should do, and we want them to be independent, but you can't be overly hawkish. We're breaking out actually a little bit. Look at that. We're getting above that SMA right now. Oh, did we get the number? Did we get the number? Let's see here. You guys, Fed rate 4.5. Okay, that's fine. That's fine. Fascinating to me that that's breaking out. So we're back above the SMA again. Again, it's probably not going to be like a breakout until we actually hear, the projections are probably what's helping. Let's look here. Let's see what they are. If any of them are lower than normal. Oh, look at that. Interest rate projection 1 year out. 3.4 versus 3.9, guys. Fuck yeah. 2 years out. 3.1 versus 3.4. Fuck yeah. Current 3.9 versus 4.4. Ugh, that's why we started going higher. Now we just need to hear Papa Powell in QT. If he ends QT and then he gives any hint of dovishness, this bitch is taking off. Mark my words. This is what is coming. That's exciting. Oh, that's exciting, guys. Very cool stuff. Let's look over here. I'm going to get to the live here. Make sure my feed is grinding out. No, so he didn't lower rates, but that's not what matters right now, man. What matters is this right here. Interest rate projections for first year, second year, current, and longer. 3 of those are lower than expected. So that's what people want to see. We're back in the 3s for the inflation rate. So it's going to be real hard to come out here and be a hawk. This is what I was talking about, okay? This is where it's happening, guys. The good stuff is happening. If you guys could, do me a favor. Can you guys hit the like? Can you guys make sure that you comment when the video's over too? And then again, just blow up fucking chat and throw out some conversations. Let's get people interested. And on X, guys, if you could, I've got it right at the top. If you could go over here and comment under this post, that would be amazing. I want people to know where they should go if they want to get the best information on the macro and the Fed and all this stuff. I might not be super humble right now, but I feel like I'm a lot better at Meet Kevin than this, for this particular subject matter than he is. So, yeah. So again, if you guys could let the world know that, share out this link, tell people to watch. That's much appreciated, man. You don't have to, but I do think I'm good at it. And if you think I'm good at it, you should let other people know. All right, JC. Wouldn't you say that lowering future rates because they're assuming a recession, it doesn't matter either way, does it? Does it, JC? If it's a recession, I mean, it has a different impact, but it doesn't matter to me either way. Because what is it going to do? It's going to pump my TLT. It's going to pump my TLT. It isn't right now, but it's flat on the day, which means it's doing better than it was. But if interest rate projections are down, as far as, or I should say, what they believe inflation to be is down for future expectations, then again, they're overly tight, right? Because we're sitting at 4.5, 4.53, whatever it's like meandering around in that range. And if inflation expectations are way underneath that, then they're tight. And if they're doing QT, they're tight. And so both of those things need to be fixed. We're going the wrong way. Don't worry about it, dude. Don't worry about it. We actually pumped on that news. Now we're just settling. We're waiting for Papa Powell to not be a dipshit, and he's not going to be. Hey, you know what would be fun? We're going to cheat here. For you guys, just because you're my besties here, we're going to pull up a little Fundstrat video in case anybody missed it this morning. We're going to cheat, and Fundstrat is not going to sue me because we're buddies, I hope. And we're going to actually let you see his 4-minute long video that he played earlier today. So if you guys are not signed up for this, I should actually probably, let me do this. I'm going to get a referral link real quick here and pull this shit up. I'm actually getting this for free right now. You'll see that in a second because I've referred 47 people. So I get a 100% discount right now. I don't know how long that lasts. Doesn't fucking matter to me either way because I love this service so much. But if anybody's curious about the referral link, it's right there. Let's go ahead. We'll pull this up again while we're waiting here, and then we'll have more conversations. I'm going to look through chat. But let's listen to Tom Lee earlier today talk about what he thinks is happening with FOMC and what he thinks the market's going to do. I think he's going to end up being pretty spot on. Here you go. This is a cheat. This is what you could get if you pay $250 a month. Well, that's including their crypto. It's cheaper than that if you just get the base.
Good evening, FS Insight family.
And this is the one subscription I would never cancel. This is it.
And community. Today is Tuesday.
I would, well, and my own, but I'm a lot cheaper. So let's just be clear.
March 18th, and this is our macro minute. Tomorrow is our monthly market update webinar.
We're going to go 2.5x.
Sleeper Grannies webinar.
You guys can always
time,
go
however,
1.25x.
It's actually been changed. It's at 12 p.m. Eastern time instead of 2 p.m. So please mark your calendars and just be aware that time has actually changed. I'm going to give you a preview of some of the comments I'm going to make. I think I want to focus on why you should not be rage selling or even liquidating or reducing your positions here. I know there's a temptation to throw in the towel, but keep in mind, as we are talking about, maybe we're still 2.5 weeks away from the April 2nd tariff deadline, okay? And that's why you're nervous. I'm going to make some points I've made before. First of all, the tariff war is not the only outcome. It's not necessarily a fact that we're going to have tariffs. When we talk about the trade deficits here, which are significant.
Don't sue me, Tom.
China
I love you. I'm trying to sell your service.
But the tariff, and I'll talk about this in the webinar, it requires Congress to actually...
I did miss the webinar, too. I totally forgot.
And again, keep in mind that the countries that are in the sort of bullseye of the White House, China, Europe, Mexico, Canada, they've all been outperforming the U.S.
And that's actually a reason for them to drop, just to be clear. That's a reason for the rotation. The U.S. had a rotation out of it that was like one of the greatest that's ever existed. So we could see that come back around again with U.S. exceptionalism over the short term and I believe over the long.
So I think markets are expecting a negotiation, not a trade war. And in fact, even if you look at the VIX futures market, they're expecting volatility to drop after April. So clearly the market thinks...
Oh, beautiful. Real quickly, Danny, thank you for that, my friend. The committee will slow the pace of decline its securities holdings by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion. 21.5 million short open again on BTC at 40x. All right, interesting. So what is going on? I care more about that FOMC comment. I'm going to let this play out, and I'm going to pull that up and take a look here and closer online.
That this is a deadline, but it's not necessarily leading to a recession. The second is the Fed's meeting on Wednesday, and we've talked about this, and I'll cover this in a lot more detail, but the market thinks quite hawkishly. They think the odds of May cut is down to 20%. They think the Fed number of cuts is only 2, and we know inflation has been dropping if you look at something like Truflation.
Yeah,
and
okay, cool.
Strangely, there's a tail bet that's emerging.
All right, so we're just going to jump into this real quick too, guys. 1 second here. I'm just going to drag this over. So this is a little broader view into the full statement here. So Marty Party put it out there. FOMC statement, I called it. QT starts ending April 1st. So not only do we have QT ending at the beginning of the month, but then on the 2nd, we have tariffs. But then we're probably going to be getting news between now and tariff implementation time, letting us know that they're successfully removing tariffs boundaries that exist today, and that they're negotiating tariffs lower for countries all around the world that we trade with. I think it's going to be beautiful. Again, don't forget the comment that we had earlier where Hassett was working with Bessent, and they were doing the things that needed to be done into the wee hours of the night, trying to ensure that they lower trade tariff barriers before 4/2. All right, let's look here. So what changed? For release, 2 p.m. So they updated the date. I think that's good. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Uncertainty around, they added. Then they removed. The committee judges that the risks achieving to employment and inflation goals are roughly in balance. So they removed that entire piece. They put economic outlook has increased. Looking better. The uncertain and the committee is attended to the risk. All right, so let's skip that. Let's keep moving. They added this. Beginning in April, the committee will slow the pace of decline of its security holdings by reducing the monthly redemption cap on Treasury securities from 25 to 5 billion. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at 35 billion. So they haven't changed debt or mortgage-backed securities, but regular securities are in play. And Jeffrey Schmidt, all right, that's weird, voting against this actions. This is another addition here. Okay, so they're just updating who was for and against. They put in here too, after Waller, who supported no change for the federal funds target, but preferred to continue at the current. Okay, so they left the rates the same, but they're going to be doing they're removing quantitative tightening. This is all beautiful. This is just what we talked about. And thank you for the links, Danny. Thank you for everybody who updates. I got to say, I got one of the smartest groups in here. Anything that I'm not up to date with or not understanding or not seeing in a post, you guys are fixing it, and I fucking love that. So there's someone at my front door dropping off a package. Cool. Hopefully it's the new rack for my nephew's Model 3 that I'll be picking up tomorrow. I wish I were a whale. Me too, Steve. Someday. My goal, this is a pretty high goal because I'm not near it yet, but my goal is to be worth $1 billion by 2030. That's my goal. I'm excited for it. This was a good post, though. So now we know, guys, what's happening here. Let's just see what other posts we might have around the FOMC. I think Marty Party got it pretty quick. Everybody else, the 40X short closed his 27.5. Yeah, okay, beautiful. All right, I might have misunderstood that. I hate retweeting Ash Crypto, but I like this post. I heard he was a scammer. I'm not even following him, but since it's a good post, I'm gonna post it. FOMC has no change, no rate cuts. All right, I'll skip that one and see if I can find a different one. Yeah, this is good though, guys. This is good. This is good stuff. This is good stuff. We're happy about this. Not a new rack for the wife. No, just to be clear there. For my nephew's Model 3 that I bought, okay? Let's be very clear. The wife is not getting implants of any kind. She does not need them. I'm very happy with what she's got. I'm also not a big boob guy. So, yes, because as we get older, really big tits would just get saggy. I don't know that any of this is needed for an FOMC discussion, but since we're here, I think that, as we age, that probably isn't going to help. Susan Campbell. QT isn't ending in April. It's beginning a taper. Yeah, whatever. Okay. Yep. Sorry. Good correction. Very good correction. It's very good correction. Thank you, Susan. Probably better than the input that I was just putting out there. Thank you for that. So again, great team here, keeping us on track and keeping us factual. Cycles with Bach. What do we got here? Federal Reserve just decided to hold interest rates at the same level. U.S. interest rate decision. Press conference in 30 minutes. Yes. Oh, okay. All right. Sorry. Two bullish headlines from it initially, but want to hear it out. Beginning in April, Fed will slow the pace of the balance sheet runoff. So we are actually slowing the runoff. And then Fed median rate, current forecast. Yeah. Okay. Cool. All good. Good account for macro analysis. I agree. Best to watch when everything seems scary. Yes, I agree with that too. Meet Micro, Kevin's ass. Thank you very much, Fred. You guys are awesome. Dude, you guys are awesome. Thank you guys. Good people on here. So we got about 17 minutes. And in case anybody missed it earlier, let me just backtrack a little bit here. So we have what we were talking about a second ago. So good things happening. Rates aren't changing. We're tapering. Bitcoin's getting above the 200 SMA. We're looking at projections, guys, for the first year, the second year, and the current that are all lower than what were previous. So previously, interest rate first year 3.9. Currently at 3, we're seeing an actual of 3.4. Projection for second year. So this is the dot plot. We're seeing a previous of 3.4 and we're dropping to 3.1, and then current went from 4.4 to 3.9. This is all so fucking beautiful. Sorry, we need a little laugh after this month. Dude, it's been a crazy fucking month. Like I was saying earlier, guys, it's hard when you do what I do, and not just like I'm something special, but when you put out the truth of how much you've lost in a month, when you put out how well you've done over a period of time, and going back to 2019, and you put your portfolio allocations, and then you put your trades, you are subject to criticism from everybody, and it's fucking painful some days to do this, and then to make videos every day when it's all fucking depressing, and all I want to do is take a hike or do something fun. Just so I can get a break away from it, because I know the path that we're headed down most likely, but at the same time, I'm trying to find good stuff for you guys, because I want you guys to be confident in that path. So I'm not just doing this. There's what I see in my head, and then there's what I need to project to you guys to make you feel confident about your future. Peru, who's sometimes, I believe, incredibly right, and he provides great content. I don't know if he's always right about the same things, but he's good. He's great content. He posts this chart for Goldman Sachs, just showing that basically we're up for a base ripper rally. If we have a dovish Fed here in 15 minutes, because of what we're seeing, this is just going to take off like a fucking rocket ship. And I want to show you this real quick. Actually, it's under Trump, so let me go back to that. So right here. So I talked about this earlier. White House economic advisor Kevin Hassett spent last night with Commerce Secretary Scott so Lutnick and Treasury Secretary Scott Bessent negotiating with other countries about mutually lowering tariffs before the second deadline. We talked about how this was probably going to happen. It's happening. Walter Bloomberg, Trump admin, new tariffs said to be worth trillions of dollars. The Trump administration's plan, if they fuck this shit up, we're going to make tons of money in tariffs. That's if they fuck it up. That's if we don't lower trade barriers. That's what ends up happening. That in and of itself will help do all the things that we're looking for in the second half of this year, coming May and June, where we're going to get our reconciliation bill, and it's going to be a big fat omnibus, and this thing's going to have no tax on tips, no overtime tax, no Social Security tax. I know so many people that will benefit from this financially, and that will encourage them to spend. And again, we've got a plan. We've got a good plan. Scott Bessent was talking about this today with Chamath and those guys, and you know what he said? Here's what he said. Yeah, TLT is almost positive. This is going to be good for TLT. You know why? Scott Bessent was talking today, and he said he believes he can move rates down 0.3 to 0.7 bips. And how is he going to do that? He's going to do that by privatization of government assets like land, buildings, and other stuff in order to be able to get it to where we're watching rates drop. So it doesn't have to just be all doom and gloom, guys. It can actually be that inflation isn't high. It can be that the Fed does the right things, what's right for America, which I think we're going to start seeing, because he doesn't want to be called somebody who's political. Jerome Powell is done. He's done, okay? He's almost done, and he wants a soft landing in his fucking belt, and he doesn't want to be seen as a political hack. He wants to be able to leave with, transitory inflation, but I fucking stuck the landing because I worked with the last administration, and mostly Scott Bessent, one of the most brilliant fucking investors and traders, and now Treasury secretaries on this planet. And that's what's happening. And we're loading a God candle. Yes, sir, we are. Bessent said he could lower 10-year just by easing some bank. Yes, exactly. And I'm sorry. I should actually reference that better. What did he say under that particular part? What was the comment? Let me find it. Give me a second. That's actually a really good point, my friend. Supplementary leverage ratio. So he'll lower the requirement for the supplemental leverage ratio, and that will open it up by the 0.3 to 0.7. That's actually the correct statement. Thank you very much. Like I said, I got a great team here, guys. Mike, you're badass. A bunch of you guys are awesome. So I think TLT still benefits, but but at the same time, I think the whole market can go up right now. I think there's a rotation. Even my buddy Jake, let's just look up Jake. Jake is a great chartist. He's trading in China. Not everybody's perfect. But so I don't love that part, but I do think he's a brilliant guy. He's a great guy. And he even said in a recent post, what did he say? He said something along the lines of, sometimes the hardest thing is, okay, that wasn't it. It's in here somewhere. God, you post way too much, Jake. Fuck, I don't know where it is. But essentially, he said there could be a rotation out of China and back over to the States. And just, again, emerging markets back into the States. I 100% agree with that. I think that's happening right now. That Tim Waltz clip is the biggest bottom signal I've seen. Yeah, right. He's perfectly called the bottom. Now we got Jim Cramer and Tim Waltz. This is great. The EXOD, Kamau said the stock I mentioned during the market open is up 30% today. Oh, wow. What is it again? What can you tell me what it is? I might have missed that from the last post in the market open. Andy, TLT will benefit from ending slow quantitative tightening right now. So again, TLT, I think either way it ends up benefiting. But if we see inflation dropping a lot and we see the Fed dropping rates a lot, that's going to benefit the housing market. It's going to set us up good for the middle part of this year, the end, heading into Q3 where we need to refinance a total of $9 trillion in debt. It's going to set us up for all that. And the thing Scott keeps saying, we got about 10 minutes, guys, until the FOMC. The thing that Scott keeps saying is that, why isn't this playing? Let me refresh here real quick, guys. I'm going to get this up. I want to make sure that we're right on the time zone here. Let me get over here. I'm going to go over here. Is this clocking? Is this them? I might have to end up pulling this on a YouTube stream, whatever. But what was I going to say? Scott Bessent. Oh, yeah. So again, that if we get a 0.5, like if we get 50 bips of a drop just from the changes that he's making with the supplemental whatever ratio, to help the banking sector, I think that's brilliant in and of itself. At the same time, if we start seeing the narrative of, okay, inflation's going to come down, we can see it. We can see it with Truflation, right? We're in the 1.5 range, right around there. That is well within the spectrum. Tariffs will actually slow things down globally more if the countries don't work with us to open up. And the ones that work with us to open up, they're going to get more. They're going to get more money. They're going to get more revenue. They're going to have an increased want and need to trade. And you know what we're going to do? We're going to incentivize trade with the countries that open up. And so there's a big benefit. And you know they're pitching that shit. When Howard Lutnick and Scott Bessent are meeting with these guys and they're hanging out with Hassett, they are talking about exactly this. You got to know that. Jonah, thank you for signing up, my friend. So I might end up switching over here real quick. Let me just do this. Jerome Powell live. And we might end up pulling this up separately. I might end up using CNBC for it because my paid membership, for some reason, is just clocking, and I don't know why. Let me do... Oh, you know what? I'm not signed in. It looks like it signed me out. So let me get over here. Pro membership renews April 14th. So I know my membership's good. Yeah, it's just clocking. I don't know why. So these guys better not copyright me, fuckers. I'm going to pull you up over here. Oh, let's see. Let's go to this one. 3,300 watching. All right, there we go, guys. I'm going to get rid of this chat screen. We don't need to hear their chat. Well, I mean, we could leave it open. See what these yahoos... Nah, these people are probably fucking idiots. All right, there we go. So we got that up. But yeah, so I think when they're having these conversations with these world leaders, they're saying, guys, we'll give you an increased amount of trade. We want to sweeten the pot for you because we want these other nations to come on board too. So we will increase trade with you if you work with us because we know there's inevitably some countries that won't. You'll be the benefactor of that, and we'll remember that. That's what they're saying to these people. The BTC whale who shorted last week just went long. Yep. Who's surprised by that? Not me. Thank you, too, to everybody's here. I don't even know how many are here. Let's see. What is it? 845. I'll take it. Thank you very much. If you guys could comment, if you guys could share on X, that would be greatly appreciated. We want to get as many people in here as possible. We want them to know what's happening, not just guess about the future. We want to know. And we work together to figure that out. It's not just me. There's a lot of great people in here. Let's see. All right, so let me get caught up in chat. So, I love it, Jesse. Your energy is the highest level I've seen. That's because there's a bunch of beautiful things coming that we've been talking about, and I'm excited to see what comes in the quarters ahead. And maybe we even have some pain from some tariff discussions with China, I think especially, and maybe Europe and Canada working together against us. That stuff can still happen, but... just like Gavin Newsom, we're going to kick some ass, okay? And no, I'm kidding. I just love doing his hand gestures. We're going to kick some ass in the future either way. And it's going to be the ass of Europe. It's going to be the ass of Canada. And hopefully hopefully it's not Canada, but it will be with China too. These things are coming. You best realize it. And so, yeah, I'm fired up as fuck. Looks like they haven't turned up the mic yet, but we got somebody over here. Let me just look at other comments. How is inflation forecasting up? Laughing my ass off. What am I missing? Inflation is down. It's down. So it went from 3.9 to 3.4, 3.4 to 3.1, 4.4 to 3.9. And why is inflation down? Because we look at Truflation. And so we knew that inflation was higher than what the Fed reported back in the day on June 16th of 2022. And we knew it wasn't transitory. And then at the same time, we knew it came down way quicker than they said. And then we knew more recently here that we've dropped from the 3s in January to the 2s in February to the 1s today. Okay, that's why. Just to get you caught up. That's where we're at. All right. Steve, did you see the incredible 84,000 call from Josh Mint? Yeah, Josh is brilliant. Josh was from Salomon Brothers back in the day. He's brilliant. He called the 84. You know what else he called? Over $400,000 on Bitcoin. That's what else he called. Kamawa, 2.3 million active users. Revenues have done really well in recent bull market. 120 million LTM. What are they though? I don't even know what they are, dude. Can you remind me what they are? Is this Exodus the company, or what is EXOD? Is it a crypto? Is it a tradable ticker? Sorry, I don't know. I'm assuming it's a ticker now that you say that. But what company is it? And thank you for providing that, by the way. Echo, Jesse's fired up, and I'm here for it. Fuck yeah. Mountain off grid. Oh, that was the BTC oil comment. Okay. Casper, vamos. Anthony C. Clear shared on my X timeline, brother. Okay. Raber trades 62.1% chance of the Fed resuming rate cuts in the June meeting. Okay, cool. It's going to be higher than that. They're going to do it in May, I think. I am right. I love the fire today, Jesse. Looking for group. Thanks, man. Namdatan. Europe and China is going to get the thunderclap. Yes, sir. They're going to get the clap. That's for sure. Casper Holt. What should us Europeans do? Move here. We can't all fit in the United States. No, that's true. And now we only take legal immigrants. So I'm not even sure how well. Maybe we'll be taking. Maybe you guys can. What do they call it? When you're persecuted in your country and they end up bringing you in to the United States. I mean, you're not as bad as the Afrikaners, but the UK. I mean, you guys literally have to worry about political persecution. And getting in prison for 10 months if you say something they don't like. So, I mean, I feel like we're going to have to start letting people in here. I don't know if this lady's going to talk. Let me see if this is updating. I'm just going to cycle and see if I can get into the feed. U.S. He ended what with an executive order? Sorry, I might have missed something in the chat. EXOD, make private. Okay. I'm going to go back over to this other one. I'm assuming they don't have volume yet. If we need to find a new one, we can find one in like 2 seconds. I'm not worried about it. Political asylum. I definitely asked for political. Yeah, you might be eligible. And thank you. I forgot the word, so it's very helpful that you found it. Kamawa said EXOD makes private self-custody wallets. Oh, okay. Is it Exodus? Is that who you're talking about? That store crypto securely on your device. It also partners with Ledger. That's the Exodus wallet, right? Is that what you're talking about? ASMR Candy Crunch. I'm chewing on the halls. That's what you get. Sorry. Casper. Martin Pilda. Keep your money in the USA, participation in elections in your country, and get better leaders. Yeah. Yeah, exactly. That's it. Be invested in the United States, participate in an election, and vote in better people. If you can win an election, if you have the chance to win an election because your European nation isn't stealing them from you, like I think they want to do with Romania, then you should keep yourself free, man. Keep yourself free. Sugar-free halls? I don't know, maybe. These. I'm excited. I can't believe it. You know, the first car I ever wanted for a Tesla was the Model 3, but I didn't buy the Model 3. I bought the Model Y because I wanted a family car, and I knew I was going to have a little girl, or I had a little girl that I needed to take care of. So I didn't get the 3 because I just didn't think it was practical. So I bought 3 Teslas in the last month to support Tesla, and my nephew's is tomorrow, and it's a Model 3. It's the car I never got, and even though he'll be the one driving it all the time, I'm excited for the opportunity to be able to pick that thing up tomorrow and see what it's like and see how happy he is with the fact that it's going to be his car to drive. It's going to be fucking awesome. It's going to be awesome. So I'll be living his dream and mine. Which part of the U.S. would be best in your opinion, best place to live? I like the Midwest. Not like Minnesota, Tim Waltz territory, but there's other good parts. But it depends on what you want, man. There's a lot of really good, like conservative, not crazy places. Florida is a great place to live, but it's expensive because of the insurance. Texas is it's becoming like a hot place, especially I think around Starbase City. I would love to get a place, a condo or something in Starbase City. That would be my goal. But there's a lot of good places to live. Jesse, can I be your nephew? No, I got enough nephews and nieces. I'm good. Thank you, though. 5 Types of Wealth by Sahil Bloom. I might even have that book. I don't think I've read it, though. Is it good, Castellano? You were talking on the morning call about screen time, taking people away from actual human interaction. Yes. I've been reading his book, which discussed. I highly recommend it. I'll check it out. Let me get a screenshot of that. So we have, guys, it's supposed to be happening now. I still don't have audio. I'm going to check another source just to make sure we're not missing it. There's some people here. Oh.
The economy is strong overall.
We are missing it.
Significant
progress. Let me find a better feed. One sec, guys. That ain't it. Let me see if it's over here. Nope, that's still broken. All right, let me go back over here.
All right, the Federal Reserve will meet today to make its second interest rate decision of the year. Economists predict the Fed will...
are solid.
Okay, here we go.
Has moved
Let me go back
to our 2%.
I don't want to miss the good stuff. We'll speed it up.
Good afternoon. My colleagues and I remain squarely focused.
Can you guys hear this?
Dual mandate goals of maximum.
Is it too low?
And stable prices for the benefit of the American people. The economy is strong.
Purple tie's good
and has made significant progress toward our goals over the past.
Let me know if
years.
I need to amp up the volume, guys.
Labor market conditions are solid.
Sounds okay.
Inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy
Oh, we're getting caught up. One sec. We must be current.
changes that will
you
matter
go.
for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming
That's actually really smart. That's the way to say it. That's the way to do it and say it.
information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty.
There.
The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets.
Good.
Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard. Howard Schneider with Reuters. Thanks for your time. So, two things on sort of the real side here: inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action.
If it's transitory?
If it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and
he didn't want to say it
as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know
The base
that.
case is transitory.
We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment.
He's right.
I think there is a level of inertia where you just say maybe
TLT is at 0.25%.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of
The
an increase.
Russell is doing really good.
Inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys. But if you look out 5 years or the 5-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace.
It's going to.
4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will.
The Russell is leading the
given where we are, we
indices.
think our
That is
policy's in a good
good.
place to react.
We got transitory
to what
inflation,
comes,
guys.
and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
I can't believe people are okay with him saying transitory. I can't believe it, but they are. It's fucking
Tim
great.
Rose, The Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time
surveys
that
are
it doesn't
biased and
materially
stupid, most of them.
enter into the
Nikki
decisions
Leaks.
of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect
VIX is
higher inflation.
dropping hard.
So
Moves
I
dropping
do
hard.
like that definition a lot. In fact, I used it at the recent
Markets are
conference
continuing
where
to
I
go
spoke. So
higher.
I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into
Why
the
is
low
TLT
twos by
rocketing?
26 and then down to
Because we
2
knew
by
it was
27.
going
Of course,
to.
highly uncertain. So I see
We'll talk more later.
progress having been made toward that, and then progress in the future. I think that progress
Making
is
money on
probably
all
delayed for the
sides of
time
the
being.
fence. My hedge is making me money,
Cuts in the
bitches.
SEP for 2025.
I love it.
Again, people wrote down 2 cuts the last time, and they look at the
Yes, we can.
and they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those two kind of
I
balance
think
each other
Papa
out. So
Powell's
people-
doing
not
exactly what he
everybody,
should.
but on balance,
I think he's being
people
good.
wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty.
Congrats, Gemini.
What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people
He's very
losing their
dovish.
jobs.
This is
but
good.
you're seeing that people who don't have a job having to wait longer and longer.
Yep.
And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened.
Beautiful
What we've had
answer.
is
This
a
is
low
also
firing, low
good.
hiring. situation, and it seems to be in balance now for the last 6, 7, 8 months.
VIX is dropping.
That's where we are. There's healthy levels of job creation, too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
Some will trickle through.
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs.
I told you, this guy cares about his legacy.
On dryers. Which
everybody does.
So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time?
Somebody's calling him out.
Didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the pandemic.
Because you could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished
Mike
yet.
Tyson.
And we have to keep that in mind. And we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecasts that really show significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's a high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels.
Yeah,
still
the
in
110s are down
the traditional,
0.66% today. It's a great buy, in my opinion.
People were saying that the likelihood of a recession was extremely low. So it has moved up, but it's not high.
Chris.
Yeah, I talk about targets. We can talk about it tomorrow morning.
Thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer
he
that
doesn't want to start any fights.
Some time ago, and I
he wants to end a hero.
Answer and have nothing new for you on that today.
Boom.
Well,
done.
Okay. Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index.
Yeah, we can talk. Let's talk about it tomorrow, Kumar.
With a 3/4 point hike. So I know you've talked about all the different measures now, but
they do want him to.
You seem to not be placing the same weight on that, and so I'm just wondering, are you dismissing that what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case.
So
it was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but nonetheless we take notice of it.
Thank you.
Michael McKee from Bloomberg Radio and Television. There is a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
See you, Victor.
Look, we're aware of we're well aware of how things are going to evolve.
Isn't it amazing how much he changes?
We will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid.
Small caps are leading. This is so fucking good.
Data and high uncertainty. And we're watching that carefully, and we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. These decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are. And we'll have to make assessments then about their implications for the economy. Those things will happen. A lot of them will happen over the course of in coming months. Certainly over the course of this year, and we'll be adapting as we go.
Rachel.
Be nice to him, please. It sucks being
Hi,
in
Chair
his...
Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you
He's
anything.
a good guy.
You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero.
Calls will come around. Everybody's buying the stock first.
Tariffs, but
then they get smart.
It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, which for some time was kind of our problem. Now it's slow, but it's definitely, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Kelly.
Thanks for taking our questions, Chair Powell.
Options move more later. People buy stock first.
Consumer sentiment has dipped dramatically.
Trust me, they're going to go up a lot.
The economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
All right, you liberal bitch, get over it.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer?
She's cute, but she's a bitchy little thing, isn't she?
That mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify. You were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that.
Sorry, real quickly, somebody asked about the summit. It's today, so we could be getting comments today from Trump about crypto, on top of all of this great stuff.
Did that have anything to do with expectations of how the debt
They
ceiling,
want to hear
raising the
tariffs
debt
are
ceiling
bad.
might affect the reserve supply?
They're not getting it.
So in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware.
No audio? One sec.
If you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. Okay. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. Now, of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire. Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, there's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down, they tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
Neil. Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. 86K over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but
every zone.
And remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment. But the elected government has a different role, and they can have those.
Here's a quick QT question. Does the committee envision at some point tapering the MBS runoff as well?
Ooh, interesting.
Tapering
mortgage-backed securities.
There's no plan to do that. At a certain point, we'll stop runoff, and we may or may not stop MBS runoff though, because we can
steak dinner tonight, boys.
Net at some point. We haven't made any decisions about that. But, we want the MBS to roll off our balance sheet. We really strongly desire that. So
give me 1 second.
But we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the SEP mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
Good answer.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I
got plenty of time too.
We're well positioned.
March, April,
to wait
May.
For further clarity.
2 months.
And
2 months.
Not in any hurry.
It's a good answer.
Matt.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed a line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying this sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember, but we're past that, or sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market, the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s.
What a loaded fucking question. Fuck you, you dumb bitch. That's not what's happening. Fuck you.
Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from, higher levels to pretty close to 2%, while the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the twos, with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk.
She does look like Amy Winehouse.
Have supported this. There's reports there.
She's probably a drug addict.
Could be a bill introduced on Capitol Hill. What impact might that have on households?
I'm kidding, obviously, but still.
Savings and spending in terms of your growth and outlook.
It'd be good. It'd be damn good.
It's not appropriate for me to speculate on
good answer
political ideas or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
Yes. My boy. Papa Powell in the house.
Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility.
MicroStrategy's up 8%, 8.22.
Second coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens it will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but
he's good. He's on board.
Forecasts. So yes.
Papa Powell's on Team Trump. Actually, probably Team Scott Bessent.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
I hear you, yeah.
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. Slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why, pretty strong support. I'd just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as
he closed
get closer and closer.
He's long now.
Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
All right. Well, one sec. We gotta fix this. All right. So that was great. I already talked about everything earlier. I already told you why all of this is perfect. This is in perfect alignment. This is literally the best case scenario I would have expected out of Papa Powell. All markets have climbed off of this. Some of them have come off a little bit from where they were at. That's okay. We got MicroStrategy up over 8%. We got Tesla up over 6%. This looks beautiful. This is the Russell 3000. It's very, very green. Some health and tech isn't doing too well, but really outside of that, and consumer non-durables, that kind of makes sense. Outside of that, though, everything is rocking and rolling, and we're good to go, guys. I'm up 350, maybe 400,000 fucking dollars today. I'll take it. And my hedge is starting to climb too. My TLT hedge is starting to climb, up 3% on the day. While at the same time with MSTU and MSTX, I'm up about $140,000 today. So it's just, it's a good day. And this sets us up really nicely. Like I said, could we have more issues with tariffs? Yes, that's been a part of the plan for a while, right? But I believe we can actually perform before 4/2. And if we get good news today from the crypto summit about whatever announcement Trump has, that's going to be beautiful, and that will be more upside. This all seems very orchestrated. The talk about the tariffs, about Kevin Hassett, Scott Bessent, and Lutnick, Howard Lutnick, all hanging out all night trying to work on tariffs and figure out what to do there. I think that's brilliant. I think that just lets people know that the tariffs aren't going to be as bad as people thought, and then also indicating that we can make trillions of dollars if the tariffs are implied. Also lets people know that the American economy is going to be good, but if anything, it's going to put pressure on the countries that we've applied the tariffs to, because they'll have extra supply because we buy so much product. Whether it's Canada, China, whoever the fuck it is, doesn't really matter. We looked at the trade deficits earlier, right? Let's go back to that and talk about that real quick. So we'll just go to U.S. economy here. Scroll down, look at the trade deficits that we had posted earlier today. Let me see. I think it's under this one. Let me see. Where you at? Where you at, trade deficit? You know what? Maybe I put it under Trump. I don't know. You know what? Let me go over here. Trump. Maybe it's in here. Let's see if we got the trade deficit. Yeah, right here. Okay. So this is from Fundstrat, right? We watched a little bit of his video earlier. I think I watched the whole thing. Did I finish it? I didn't even finish it. We only went halfway through. I guess we could look at the other half of that. But let's hop back over here. So again, so this post talks about how China and Mexico are going to hit the hardest by the trade deficits that we have. Vietnam, Ireland, Germany, Taiwan, the rest of these countries too are going to suffer, right? Like the top 10 are going to suffer. It makes sense that they work to fix trade imbalances because they're the ones that suffer. We're the ones that benefit. And they'll have reduced demand, and if they have reduced demand, they'll have to sell the shit cheaper to somebody else just to keep the manufacturing facilities running, right? And so if they have to do that, that's problematic for them. But it's great for inflation. So again, there's a reason why inflation was only 1.6%, even though Trump was pulling in hundreds of billions of dollars from China in the first trade war. Everybody thought it was going to be inflationary. It wasn't. Papa Powell said all the right things today. He said that we're seeing, again, consumer spending is moderating, but we had a solid economic growth. Businesses and people are a little bit scared, paraphrasing what he said here, a little bit scared and holding off on purchases. They don't know what's going to happen with all that. He doesn't want to talk about future policies, but a lot of the future policies are super positive for the economy. But again, they've got 2 months before they have to worry about screwing around with potential rate cut. I do think we'll probably get it in that amount of time, especially if we see any kind of global slowing or we get any negativity on tariffs that lead to thoughts of slowing. I think all of that will become better. It looks like markets fluffed up a lot. They're coming back just a little bit. I think this is natural. Everything we heard today was fucking great. It was all great. It was awesome. You can't take what was said today and be negative. It doesn't make any sense if you are. So be happy, guys. This is what we've been waiting for. This is the best case scenario we could have got. And you can see this in things like Bitcoin. You can see this in things like MicroStrategy. We talked about a post earlier where we said, hey, guys, we're at the breakout zone. We've pushed it hard for days. We keep touching it over and over again. We got a W bottom off the 200 simple moving average. This bitch wants to break off of this next fib level, and it has, and it's went up to peak volumes just like we said it was going to do this morning. I already sold 25,000 earlier. I'm not that interested in selling more. I actually think the next couple of days could be really good. And maybe even we start to get towards 90,000. And if we do that, guys, I'm just going to pull this over here real quick and bring Bitcoin to the main screen. We got to talk about that because, again, we're hitting trading levels going all the way back here that go back to April of 2021. We had this resistance line that we found again in October of 21. We found it again in November of 2021. We turned it again into resistance on March of 2024. We broke above this bitch. We perfectly back tested this shit right now. We didn't go down into the deep zone, right? We had found support in the green, and we could have went lower, but we didn't. What did we find it on? We found it on this 4-year fucking trend line and this downward sloping support zone. We found support, and now we're back above the 200 moving average on the daily and getting ready to close above it again. This is a lot of strength. We are going to make a lot of fucking money. This is going to be a hell of a bounce. Could it get hurt by tariffs in the future? Yes, but it's all going to be short-lived. This economy is going to do really well. If you're worried about it, pick yourself up a little bit of TLT as a hedge. Again, here's what I'm rocking right now on TLT. Let me just zoom this over here and show you guys. Just 1 second here. Actually, fuck, it's not loading. Whatever. Fuck it. TLT, 110 calls, 100 calls running January 2027. I'm seeing them up about 2.99% on the day. The last time, we'll look at it again tomorrow in the market open, the last time we ran those things, we saw an opportunity for 10x the underlying asset, and the underlying asset could do a 20% move. So let's just look at this here. So what's a 20% move? It's what we call easy. It happened here in very short order. It happened here in very short order. A couple of months, we can do a 20% move. I'm expecting one over here. We're already starting to see some of it today, up 0.5%. And this thing, if we go up to this dead zone up here, around the 110 range, right up here. You see this volume, how there's no volume here. This is going back. We had the worst rout since the 1700s in the bond market. And so TLT is cheap as fuck. And Scott Bessent has told us he can get this thing. He can get probably 50 bips just from adjusting ratios for bank loan requirements or for banking requirements on what they have to hold. It's the supplemental ratio, leverage ratio, whatever it's called. So that alone is going to be a great way to bring down these yields. And then at the same time, I think the tariffs are going to end up bringing down these yields too. And again, the Fed's going to bring down these yields if they lower rates. We're getting ready right now, guys, on the 10-year, and the 2-year probably leads that. We'll look at it in a second. But we're down almost 1% on the day here, getting ready to break under the 200 moving average on the monthly time frame. Why am I bringing this up? Because if we look at right here at the RSI for that same time frame, we've had a downward resistance line that started, honestly, in October of 2022. So here's a more truthful way of looking at it right here, right? So this thing has been sloping down. We've had bearish divergence since October of 2022 on this 10-year yield, and yet it's been climbing in a rising, broadening wedge. This bitch wants to come down. It was either this or the S&P. It looks like the S&P has not found its time yet. It's this. And so I think we're going to roll over. And I also, if we look at the 2-year, that's the biggest signal because it's the shortest time frame. And again, it's doing exactly what I projected over here. I can see us months from now looking at 3.44% on the 2-year. This just pulls yields down, man, and it makes it to where the Fed is too tight. The Fed has got to loosen. I'd be surprised if we don't get 4 rate cuts this year. And the only reason we wouldn't get that is because our economy is doing too well, and you can't be mad at that. I think I'm good now, guys. I do want to go out with something here. So let me just see real quickly here. We'll see what we can find from the playlist. But I think we should go out with something. Let me see what we got here. Better kill that. 1 second. Can't play that. If I play that, I got to put it in the thing. I don't want to put it in the thing. I am very optimistic about our future, guys. And I think we have Donald Trump. We have Elon Musk. We got Scott Bessent. We got so many amazing people to thank for this, including Hal Finney, Satoshi Nakamoto. There's so much good stuff coming, guys. Just enjoy your day. I'll see you tomorrow morning bright and early at 7. And let's make a bunch of fucking money. And if you've lasted this long, if you didn't punk out and sell because it was scary, and it was fucking scary, I'm not giving anybody a hard time that did. Congratulations. You're getting ready to reap some rewards of buying the dip when the dip hurt so bad.
I got love for every nation. I got love for all races. I got love for all religions. Got love for so many places. No love for a politician, a congressman, or a senator. If the country that they put in first ain't the United States of America. No love for these politicians with corporate interests in other countries. Only one that I serve is God. I don't serve man, I don't serve money. No love for the people living in the USA, but always hating it. Got a lot I probably shouldn't say to y'all. Matter of fact, I'll just pray on it. I'm pro-life, pro-God, pro-gun, not ashamed of it. Yo, worshiping military, killing babies, mutilating children, yelling Satanists. Supporting the troops in their tour doesn't mean that you're supporting the war. Supporting the freedoms that they fighting for doesn't mean that you're supporting the gore. Supporting the country I live in and loving it doesn't mean blindly supporting the government. The world that we live in is trouble. The turn of the media, we should defund it. Supporting America for other nations does not make me a racist. If you like communism so much, I'll pay for your vacation. America first, the people are hurt. Got vets in the street with nothing to eat and nowhere to work. Sending our dollars overseas and funding these wars. No love for these politicians if they're not America first. America first. This countries protect their borders. It's not a controversial subject. I say cause the southern border, it seems to get people upset. I don't care what names you call me. We in $40 trillion of debt. Uncle Sam takes half your money, then you get a little refund check. I am America first. Kamala cares a better purse. I never sell out the people to raise my net worth. The Second Amendment is there to always protect my first. I'm a better rapper than Meg Thee Stallion, and I don't even have to curse. Let's keep the American dream alive and put an end to all the lies. BLM raised billions, and what did they do for black lives? Politicians promise you the whole world, then they backslide. What happened to Hunter's laptop? You know I'm most strapped up. Gun rights are human rights. Feminists been sold a lie. You can mess around and find out. Play stupid games, win a stupid prize. God bless the whole USA, even the ones you hate me. Still fighting for you today, and no globalist paid me. America first, the people are hurt. Got vets in the street with nothing to eat and nowhere to work. Sending our dollars overseas and funding these wars. No love for these politicians if they're not America first.